Hi everyone, welcome back to Corporate Decoder, the place where we unwrap the mysteries of corporate filings, and today we're diving deep into Pasithea Therapeutics Corp. And boy do they have some interesting moves to discuss. Imagine a company holding a big party for its shareholders, deciding on some spicy changes to their stock plans and even how many of their company shares should exist. This is a Form 8K filing, a current report that companies file when something really important happens that shareholders need to know about right away. This report covers a meeting on September 3, 2025, where Pasithea Therapeutics Inc. shareholders made some big decisions. Pasithea Therapeutics Corp, as we know, is a company focused on developing treatments. They are based in Delaware and their ticker symbol is KTTA. On this particular day in September, the company held its 2025 annual meeting of stockholders. The first major event was the approval of a change to the stock incentive plan, also known as the 2023 incentive plan. Think of this plan as giving the company's employees, especially top executives, the chance to own a piece of the company by buying stock or getting it as a bonus. What they did was increase the number of shares that can be handed out through this plan. They added another 1,740 in 2020 number of shares that can be handed out through this plan. They added another 1,740,000 shares to the plan, making the total available for these incentives 2,040 in 2021 shares. This shows the company wants to reward its team and keep them motivated by aligning their interests with the company's success. More shares available means they can offer more stock options or grants in the future. This next section details all the things shareholders voted on. It's like a shareholder town hall, where the company presents proposals and the owners of the company get to vote yes or no. First up, they voted on electing new board members. Directors are like the captains of the ship, guiding the company's overall direction. They elected 2 directors, Alfred Novak and Simon Dumas-Neal, to serve for a 3-year term. Next, they approved their auditor, CBCPA's PC. This is the company that checks the company's financial statements to make sure everything is accurate and above board. It's crucial for trust and transparency. This is a repeat of the stock incentive plan we just talked about. Shareholders formally approved, increasing the number of shares available for that plan. This last proposal was a really big one, and it's often a sign of a company wanting to change how its stock looks to the public. They approved an amendment to their certificate of incorporation, which is basically the company's birth certificate, to allow for a reverse stock split. A reverse stock split is when a company reduces the number of its outstanding shares. So if a company does a 1-for-10 reverse split and you own 10 shares, but each share would be worth 10 times more. Companies usually do this to increase their stock price per share, perhaps to meet exchange listing requirements or to make the stock appear more valuable. This vote gives the board the power to decide on the exact ratio between 1 new share for every 2 old shares, up to 1 new share for every 20 old shares. They have a year from the meeting to make this change. To make sure the meeting was official, a certain number of shares had to be present either in person or through a proxy, which is like a vote cast in advance. Out of over 7 million shares eligible to vote, almost 3.5 million were represented, which is good enough to meet the quorum requirement, meaning the votes are valid. Looking at the voting details for the director elections, we see Alfred Novak received 1,311,216 votes in favor, with 27,319 votes withheld, and the significant number of broken non-votes, which are shares held by brokers for clients where the clients didn't provide vote, and 18,856 for votes, with 49,679 withheld, and the same 2,100 nil got 1,001 15 at an 856 for votes, with 49,679 withheld, and the same 2,156 for fives, with 49,679 withheld, and the same 2,156 for votes, with 49,679 withheld, and the same 2,156 for votes, with 49,679 withheld, and the same 2,188,856 for fives, with the 49,679 withheld. For the auditor ratification, it was a very strong approval. 3,403,964 against and 51,864 against and 51,874 abstentions. This indicates high confidence in the accounting firm. The vote on increasing the shares for the stock incentive plan saw 954 in favour and 354 in favour and 354 in 8 and 98 against, with 28,173 abstentions and those same broken non-votes. While it passed a number of votes against, and notably the broken non-votes suggest some shareholders might be cautious about diluting their ownership or simply didn't vote on this matter, the reverse stock split proposal received a healthy majority of 3,151 in favour against 432, with 30,632 with 30,006. Clearly shows shareholders are on board with the company's plan to potentially adjust its share structure, likely to boost its stock price. And to complete the picture, they filed Exhibit 10, which is the actual amendment to that stock incentive plan. The report is signed by Tiago Reis-Marquez, the Chief Executive Officer. Well, so what does this all mean for Pasithea Therapeutics Corp? The company is actively managing its shareholder structure and employee incentives. The approval for more stock under the incentive plan suggests confidence in future growth and a focus on retaining talent. The green light for a reverse stock split is often a precursor to strategies aimed at improving the stock's market perception or meeting exchange requirements if the price has been too low. It signals a proactive approach to market positioning. While the details of the reverse split ratio aren't set, it's a powerful tool the board can use. The strong vote for the auditor also points to a well-managed financial oversight structure. Looking at the overall direction of this filing suggests Pasithea Therapeutics Corp is making strategic moves to align its internal incentives with external market perception. The increased share availability in the incentive plan is a positive sign for employee morale and retention. The upcoming potential reverse stock split, though it doesn't change the company's fundamental value, can be a signal to the market that the company is working to maintain a certain stock price per share, which can be important for attracting institutional investors. A key risk to watch here is always how a reverse split is perceived by the market. It can sometimes be seen as a sign of weakness if not handled correctly. However, given the strong shareholder support for this proposal, it seems the shareholders trust the board to implement it beneficially. What are your thoughts on these moves by Pasithea Therapeutics Corp, particularly the potential reverse stock split? Let us know in the comments below. If you found this breakdown helpful, please give it a like and subscribe for more in-depth corporate analysis. And don't forget to join our Discord community, linked in the description for even more discussions. Thanks for watching, and we'll see you in the next one.